What's going on, guys? Hamilton here with the Trading Initiative, and today we're going to be doing another deep dive, except this time we're going to be targeting financials.
Could have been on Wall Street, should have been on a ball team. Could give a fuck about y'all team, cause I don't really feel none of y'all. Morphine, Wall Street.
What's up, guys? We just wrapped up our mentorship session here Thursday, March 3rd, 2022, and we are focused on potentially shorting the banks, the financial sector. There's a lot of stuff going on right now geopolitically. There's rumors about whether or not banks and the Fed are actually going to be raising rates, etc. We're looking past all of that stuff, and we're strictly focused on price. First things first, we're going to start off here with Koyfin. Year to date, we're going to look at the three major sectors and industries within the financial area. XLF being your biggest ETF, encompassing majority of the largest banks within the U.S. sector, and then you have your regional banking ETF, which is a more volatile industry within the financial sector, generally showing your credit unions and your smaller banks, and then you have your insurance within KIE. All three of these in relative downtrends since the middle of January, and that is important because a majority of the market is in downtrends as well, but value has been outperforming growth. So why are the financials not responding with the rest of value? When we look at something like energy, which has absolutely gone through the roof this year, what is it about financials that is holding it back? That is what we are going to look at right now. So if we scroll down and we type in XLF and we hit the snapshots here, let's look at the holdings within XLF. Let's go back 1 month since it is quarter to date. We can't go back too far here. Let's see what has been underperforming against the rest of the sector. We can go ahead and filter this through return, and we can get some names right off the bat. We get Morgan Stanley, we get Citigroup, we get Charles Schwab, we get Bank of America, JPM, all of these down 10% or more over the last month. So this is the area of the market that we want to be looking at potentially opening up shorts, because not only is it underperforming the market, but it's underperforming value, which is right now propping the market up through energy, etc. So if we actually pull up financials and look at it in TradingView, we can see that we're sitting on some pretty decent levels here for risk on, risk off. XLF being, once again, the largest ETF. This is where we start our analysis within TTI, and therefore this is where we want to look. We're looking at this as a very risk on, risk off. If we're below 37.5-ish area, we want to be looking to go short financials. If we're above this, we don't necessarily want to go long, but maybe we want to wait a second. But XLF is looking incredibly vulnerable. If you're a TTI trader, you know that being below 50 RSI is the shortable range that we want to be in. If we do break this 37.50 area, we want to be short XLF names. Now, there are a certain number of us within the community that are already short. We've opened up some shorts already within the financial area, and this is expecting that XLF will actually break down and close below that 37.5, giving us a little bit of extra profit cushion while others chase that price action later. A few names that we just went over within Koyfin that I know off the top of my head that have been underperforming against the rest. Goldman Sachs, look at this beautiful short setup here. We have the huge extension coming out of the COVID era regulations that brought us all the way up. I mean, if we just look at this really quick, that is a massive, almost 100% run up. That is a near vertical move in a name that does not generally move vertically. I mean, if we go back and we look at Goldman Sachs, this is not a traditionally vertical mover at all. And so generally speaking, when we start to see some cracks in the market, when we start to, consolidate on some very long-term support here going back a year, this is an opportunity for us to get involved in the market to the short side, because what goes up quick goes down even faster. So we have a level here that we want to be looking to short at around 329.37, but realistically it's a zone anywhere between 33350 and 32550. We break and close below that. We want to be short Goldman Sachs, and we have some price targets here at 26911. Just based off basic fibs, you can see how we place the fibs, and it makes sense, right? These levels make sense. Realistically, targeting that pre-COVID high of around 250 would be the end goal here with Goldman Sachs. And if we're not even shorting these on the chain, the options, and we're just doing this spot, I mean, that's still a 24-25% move to the downside. There's a lot of opportunity to short Goldman Sachs if we do get a close below, we'll say 330. That's the line in the sand. That's the area that we're looking to go short Goldman Sachs. You have other names like JP Morgan. Now, this is already breaking down. So if you're looking at JP Morgan and you're looking at Goldman Sachs, you go, well, this might be a little bit too far gone right now to enter a short, but this is a good barometer of what the financial sector is doing. We have the pre-COVID highs. We are now below those. So not only did JP Morgan leg up on those pre-COVID highs, nearly 25%, but we are now sub those COVID highs. This is a big indicator within the financial sector. If JP Morgan cannot hold its pre-COVID highs right here, well, what's to say any other bank can? They're one of the bullweather names in the sector here. So JP Morgan giving us a little bit of a hint that maybe we should be aggressively looking at shorting the financial sector. Moving on to the next one, we can look at Bank of America. Now, this is a name that I did actively get in on. So I am actively short Bank of America. This is our BRB setup to the upside. I did get short today, somewhere around the 43.5 area, 43.44. I almost top ticked this on accident. I'm up about 20% profit on my contracts. I am targeting this $39 level, so I bought the $40 puts. I believe I bought 2 or 3 months worth of time on these puts. I generally do not buy weeklies, and I do not buy same month. I want to buy time on these. So I am positioned to take advantage of any sort of drop on Bank of America. And realistically, the reason why I liked Bank of America is the contracts were cheap for the play that I wanted to take. We have a clear horizontal risk on, risk off level at 43.34. Round that up to 43.50 with a clear profit target of 39.18. I just generally look over at the levels. Does it make sense? Absolutely. This fib does make sense based off of previous support and resistance. I took this today. RSI is below the 50. This fits everything that we want in a short. And you know what? If we don't actively break down here, I'm going to get out of the contract at anything above, a $44 close and take whatever premium I can get out of that short play. So this is a play that I'm actively shorting, but once again, as you can see, there's a lot of room here to fall in Bank of America, just like we saw with Goldman Sachs. A few other names before we wrap this video up. Morgan Stanley, as you can see, we already went through these in our mentorship meetup that we just got done with, but Morgan Stanley is another name that absolutely has a long way to go towards those COVID highs. Now, it is holding up a little bit better. We like to see these arguments. These are previous price levels where we can use as risk on, risk off. Previous resistance turns support on the way back down. Just view it as this. There's a couple extra spots here on the way down for Morgan Stanley to bounce. It's not going to be a free fall like Goldman Sachs looks like, but this does look like it has room to continue to fall. Realistically, looking at that $76, $75 level as resistance turns support, which is still a 12-13% spot, and then all the way down to pre-COVID highs 35. I have no idea if this is going to reach all the way down to about $56, $57. Those are just potential targets, but this entire sector looks incredibly vulnerable to a pop down. Now, Wells Fargo actually looks the strongest out of all of them, ironically, at least over the last few months. As of right now, it is below the 2019 highs. So we did break out, and we were almost up and setting all-time highs, I believe, in Wells Fargo, and it just shit the bed with the rest of the sectors. So there's a lot of opportunity here to be looking at when it comes to the financial sector. This is something that we want to get involved in within Trading Initiative. So if you are in the Trading Initiative and you did not make the meetup tonight, this is the area we want to get involved in as long as XLF breaks and closes below this level. Pretty straightforward, right, guys? And hey, guys, if you're not already subscribed, please subscribe to the channel, like the video, leave a comment below, and I'll catch you in the next video.